So this is a demonstration video just to talk through some account mapping logic within Deer Inventory. So I'm going to go into the account mapping area here. As a general rule, when Waypoint are setting up your system, we'll use some best practice mapping to Xero or QuickBooks Online, but we will usually ask you for confirmation of this, or possibly to create some extra accounts for us in your accounting system. It's important to note that Deer does not have its own accounting ledger. It simply uses the accounting ledger from your accounting system. So if we need, for example, a new expense account or a new cost of goods account, then this will have to be placed within Xero or QuickBooks respectively, and then will have to be synced through by Waypoint. All of these accounts here are default accounts, so it's also possible to have unique accounts for particular products, particular customers, or similar. So for example, if you wanted to record your retail sales separately to your wholesale sales, you could do this by customer mapping. Or if you wanted to record your t-shirt sales separate to your shorts sales, separate to your jacket sales, you could do this by product mapping. These accounts are required as a generic fallback though. So the inventory control account is the main obvious one to use. So that's just a current asset which is used to hold your stock on hand. Obviously, as we mentioned before, if you've got, say, stock of components, stock of finished goods, stock of work in progress, we can do this with more advanced mapping, but this is a default account to use. The inventory discrepancy account is generally the same, but occasionally people will have a unique asset account for variances and discrepancies. There's generally no need to have a separate account because of the reporting you can get from Deer, but if there's a predefined need, then we can use a different current asset here. The cost of goods sold account is where the COGS journal will go to. So if you sell a product that costs, say, $20, there'll be a journal from your stock on hand to a cost of goods sold account. The revenue account is a sales account type in Xero as well. Again, it's a generic one. The tax liability account is where the tax portion of the sale goes to. So this is usually GST, VAT, or similar. The supplier deposits and customer credits accounts are usually the bank accounts, but are the accounts where this money either is received to or goes from. So usually it's the generic everyday bank account. And finally, the gift card liability account tracks a liability for gift cards as they're sold through the business. This is still an underutilized area in Deer, so it's not a required field unless you are using gift cards. Hopefully that all makes sense for the generic information. As part of a testing process when Waypoint is setting up your system, we can obviously provide reporting of this and can make changes to these at any point. Remapping the information isn't always the easiest thing to do, so it's well worth checking this during the testing process. If you think you've got any unique use cases or any other way that you want to track these accounts, feel free to raise that and we'll advise while we're setting up products, customers, suppliers, and similar. Hopefully that all makes sense, and we look forward to continuing with our work.